So I'm often asked, what's the best way to find unusual option activity? These trades that are large in direction, meaning that they're buying calls or puts and they're betting that a underlying is going to go in that direction in a certain amount of time. And if it doesn't, they lose their bet. So it's very confident traders that are positioning in the options market, making these big directional bets. Now, there's not just one way to do it, but one of the ways I'm going to show you and talk about is following the most active stock options. So the most active stock option strike, finding that and ranking it by what's traded on the offer. So the one I have for you today is Apple. So we're going to walk through and look at Apple here. Now, we got in this one a couple weeks back, and we got a pop higher. It was back actually last week. So we got into this trade, and it was a short-term trade again, and then we were able to get out of it on this move here, or actually it was back here. So we were able to get in back here, either the 9th or the 10th, then sell into this move here, and then it kind of backed off here. So what we're seeing again is some activity, and this was the most active strike for today's trading. Now, that doesn't necessarily mean anything, but what it does mean, if you can figure out and create a system, a filter, is this was the most active, and this was in the July 2nd expiration, so 9 days to expire. 56,700 contracts traded with an open interest of 24,000. So this right here tells us right away that volume exceeds open interest, so this possibly could be buyers or sellers. Now, what I'm seeing here is that 60% of the volume today traded on the offer, 11% on the mid, and 29% on the bid. So on today's action, even though the stock was flat, what this is indicating to me is that we're going to see open interest tomorrow increase, and these were likely buyers coming in and looking into this or position themselves at 135. Now, why are they buying? I'm not quite sure. I mean, this is a large amount of money depending on where this sticks. This is a decent amount of money in a very heavily traded name. And that's oftentimes why in these videos, or even in my services or trading myself, I don't really follow this activity, but what we've seen over the last, I have to say probably the last 8 months, 10 months, is this retail boom and activity that I would normally shake off or ignore start to pick up more on because of what's been coming out of this positioning in these contracts. So here we have 9 days. They're looking right here. They're at $1.09. The one thing that concerns me is the time on here. So always, for one thing, you could do a calendar spread. So buy this, sell one a little bit further, or to do a call spread on this one. So if I were looking to do something here, being how they're positioning, I would have to say this. I would have to look at something such as probably, the expected move on this one is just about $4. So if we look at $4, I was going to round this up to 137. What I would do with this is maybe a 135, 137 spread. If you wanted a little bit more risk, meaning risk the premium, you can make that spread a little bit wider. It's not necessarily advantageous to make spreads smaller and add more. So if what you could do with 10 contracts on buying a 134, 135, it would actually make more sense to spread it out a little bit more. Maybe do 5 contracts, spread it out with the same risk. So you want some bang for your buck, and it's not necessarily the best way to make it that tight there. But if we look at the chart here, 137 puts us right in this level of resistance here. So we could see a breakout above that, and then I'd see it pop down. So this would be a quick move. This is not something to hold. It's a quick trade, in and out. Look for the pop, sell into that, and see what happens. So keep an eye on this one. We'll see you in the next video. I'm interested to see how this works out as well. Last time we saw the activity, it worked out. Let's see if it goes for 2 for 2.